Let's talk about the stock market. We obviously saw a wild volatility session. We saw movements of new peaks being formed over the last couple of days. And then as fast as that was being said, Powell came out and put literally the spookiest of spooks into the market. Basically, we saw a big discussion about possibly raising rates faster than anyone expected. Now, some good news was that actually growth stocks were seeing some big gains. Microsoft up 2.85%. After hours, we saw that drop as much as 5%, and then it went all the way back up. Tesla had its announcement, and we're talking about that a little bit more later in today's video. And then the rest of the semiconductors and Google and some of the big stocks were doing well. Apple and Amazon soft into earnings. We will expect Apple to come out, of course, Thursday after the close. We'll be doing some videos on that on the weekend, but that's going to be a little bit tough to find out exactly what's going on with Apple. I think the problem with Apple is that it's one of the highest in terms of fundamentally valued companies. It's got that high PE ratio. It has to perform. So let's get into actually what the Fed just said. And of course, the big thing that really happened was we got the FOMC statement. The market looked at it. It wasn't that concerned. And then we saw Powell come out. And as soon as he came out, the market started to tank. It's almost like he's the specter of the market. We've seen this quite a few times play out. And he always brings this idea of the market. We're always like, uncertainty, 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 and then he'll say some crazy words. So he said, of course, sooner, faster, QT. So, of course, the tapering is going to be faster. Let's bring out some big words that are used here. He wants to bring purchases to an end in early March, and the committee now expects that it will soon be appropriate to raise the funds rate, basically meaning guaranteed in March, we're going to raise the rate. When we look at the 2-year yield, though, and what that spiked to, we just added an extra rate hike pretty much into the equation. That's what the market's done, and that's what it freaked out about. If we keep scrolling through, there's quite a lot, but let's just quickly go over to the statement itself and the discussion. Of course, again, soon be appropriate to raise target rate range for the federal funds rate, continue to reduce the monthly pace of net asset purchases, bringing them in to an end in early March. That's the big stuff. I really feel like it's kind of in line with what we expected, but maybe they're prepared to go a little bit faster. He said something about assets that was a little bit worrying. He basically said there's no threat to the asset prices in. He feels like the market assets are overpriced at the moment, and that any further decline would not necessarily be a huge detriment to the economy as a whole. So it's basically like saying, oh, I'm prepared to let these assets drop a lot further. And the market did not like that. We move through to the Dow, S&P, Nasdaq, Russell 2000. We take a look here. You can see 2 o'clock, we knew the FOMC statement. 2:30, look at that. As soon as 2:30 occurred, Papa Powell, he pushed that market down, and we ended up having that big volatility on the session. Now, we need to remember that the Nasdaq was up as much as 3.5% on the session and ended up 0.08% up. So that's a big switch after that. We hit gold. We obviously saw quite a lot of different technical markets moving very, very heavily. We'll take a look at that second. If we move across, we know that growth stocks actually perform best for the day. Maybe there is a little bit of rotation into these. The good news is we've had Tesla announcement, which we'll talk about soon. And we've also had the Microsoft announcement. Now, on the surface, Microsoft EPS, everything looked really good. Even their guidance after hours looked really fantastic. They expect an increase in growth and obviously their cloud computing and all those types of things. And that's led to a massive switch, -5% to +2%. It held through the session, which is important. Now, let's get into the technical analysis stuff, and we'll begin here with the 2-year. 1.156% now. That's a big spike up. We've gone basically 0.15 after Powell's speech. That's what spooked the market initially. And I think that we need to find a base in the markets. We're going to continue to see this increased volatility, we would think. But to find a base, we really need to see this 2-year calm down. Now, we've talked a lot about volatility January, February, March, then that idea that April into the later half of the first half of the year could be a fantastic time to own growth stocks. And I think we'll get a lot of clarity as we see the rate rise come through, as we see the next meetings, and the market will be left to itself to really kind of re-rate itself. Be careful and constantly watch the 2-year and, of course, the 10-year, because they're starting to get to levels where if they blow past certain zones, the 10-year here pushing up at 1.873%, If that gets past 2%, we could be in a new low for the Nasdaq, a new low for the market, and things could be getting very scary. So we are at a key support. There's no doubt of that. We'll look at the S&P 500 soon, but we do need to be careful in general. Let's move over to some of the big markets that we're moving here. We'll go over to the DXY. This is the weekly here. You'll notice the weekly coming off that big trend line. It continued to bull very hard. We've got a great resistance at 96.90. It's starting to pack in extra interest rate hikes. And we have theorized that this year is going to be fairly strong for the US dollar in comparison to other pairs, just because it's unlikely that other economies are going to move as fast as the Fed with their interest rate rises. It's just not going to happen. Here in Australia, we might be looking at 1 if we're lucky by the end of the year. Possibly there's a chance of 2, but I very much doubt it. Whereas in the US, they're talking about 3 to 4 rate hikes at this point. And it looks like Powell is partially prepared to do it, which is the thing that's surprising the market. They thought 1, 2, 3. Now maybe that fourth one's starting to creep in there. DXY, if it gets past this level, it's going to be a big participation zone. Also, it probably will coincide with a little bit of risk off in the market. So watch these types of zones. They will be important. Let's move over to gold. Gold got really hammered during the speech. So it was looking really good coming into the event. And then, of course, as soon as Powell did that thing that's uncharacteristic for him and basically said, look, guys, we are going to be prepared to raise rates. We're prepared to take it away. And no one really expected him to say in such an aggressive term that he's prepared to see asset prices basically drop. We have this market that's now sitting here. Gold still could be going okay, but it's 18.20, interest rate hikes at a faster pace. Maybe it's better to be in the US dollar than it is here. And that's why we're seeing gold versus the US dollar dropping right back down. Let's have a look at the major markets, though. Let's look at the S&P 500 indices to start off with here. 43.50. Look, this is in the middle of the range. I mean, we know that the most important thing here is really about the weekly 50 exponential moving average. We have a nice high that's been put in through the sessions now, 44.52, 50 exponential moving average, the blue line here on the 1 hour. We are looking like we're forming some kind of base, but this has happened before. And in the weekend video, we'll look through all of these things. But we've got a base. We knew it was a key zone. There's no doubt that 4,300 is the real deal. I know it went lower than that this week, but the reason why we can go with 4,300 such a real deal is because it's the 50 exponential moving average on the weekly. That is the next logical conclusion. If we close somewhere around here for the end of the week, let's say we got the Thursday and Friday sessions, they were up, down, and all around, which could certainly be happening here. We create a long leg doji like this one, a high, a low, an open, and a close. The best thing about that is if we then got a bullish movement, we get clarity from the market. I'm not overly concerned about the ability to buy quality stocks in the markets, and I think that's really important. Microsoft, great earnings, backing up its fundamentals. We talked about how it's not as overpriced as other people may believe it is. Then we also have Apple coming out this Thursday. That'll give us clarity. It's a tough week to invest, and obviously you shouldn't be swing trading when the VIX is so high. And just remember this volatility. Sometimes it's okay to stay out of it if you want to get clarity. The good thing is here we have a high, we have a low, and at the moment we're sitting straight on the support. That 4,300 area, it's the real deal for the S&P 500. Let's move over to a couple of other markets. Let's just quickly discuss here on the right-hand side. You'll notice we have the US 100 up 0.52, 14,238. Let's take a look at that. Still looks like one of the weaker markets, though some of the stocks are starting to find some heavy buying in them. So that's pretty important. Look at the S&P 500 the most. That weekly 50 is the real deal. That's the one we want to be doing. IWM did drop again. This has still got that Wyckoff distribution on it. I don't think we can ignore that. And until we start to see some form of base, or until we see IWM break back above 210, we cannot be sure that this sell-off is over. We've got some very big points saying the sell-off could not be over. We've got interest rates going up, 2-year, big deal there. That's a big deal going up. We've got the VIX sitting above almost 32, so that's still a spike. We need to see the VIX calm down, a pattern base to be formed, which we haven't seen yet. It can take a few days to get this clarity, remember that. And we also need to see a slowdown in the puts coming through in the market, and maybe an increase in calls, an increase in that bullish sentiment. And we will be here creating videos to try to figure out when that happens. We're not convinced the low's in. We want to see this weekly close and therefore monthly close, and then get the new pivots open for the S&P 500, get a little bit of clarity whether we get an open, like a long leg doji or something like that. And then we can find out when we break that high and say, okay, cool, now we've got that accumulation base. Buying the dips worked in the past. Buying the dip at this zone is certainly a solid strategy with certain portions because it's a 50 exponential moving average. But remember, it's still quite risky, and that's a big component of it. Let's move over here to Tesla. And Tesla came out with its earnings. If you've had a look at the earnings report, there's a couple of things that I think I'll just point out. There's like $500 or $600 million of random costs. It turns out that it's got to do with Elon and his bonuses and all those types of schemes. I think it's about payrolls, about 600 million up. They have done pretty well. They've mostly beat across the board, similar to a Microsoft. But the main problem that they had was obviously they think there's going to be supply chain problems in 2022, which is going to continue to, I guess, ruin their scaling to a portion. So look, overall, a beat, pretty good. Guidance, again, being the problem here. Again, with Apple, even if they beat, look to the guidance. Look to the guidance in every one of your favorite stocks. That's going to be the big key here for the markets. But Tesla holding above that 900, we maintain the exact same thing we've always said. 900 into our trend line is the best place for Tesla right now. And the good news is you've got that earnings out. You can go and digest that, have a look at it, and we know where the heavy buyers are for this stock. And they're sitting around that $860 to $900 range. Let's move over to a couple of other markets here. We've got US oil continuing to just be blockbuster trade along with a lot of these commodities out there. Commodities look like a bit of a super cycle. We've discussed this now since really November last year. I've been very bullish on iron ore since that point. We discussed BHP here in Australia. It's one thing we certainly do know. And US oil is about to potentially make a new peak. We've got here bullish hammer here on the 2 hour, a test of the previous high, 87.83. We know the next stop could be 92 here for it. It started getting bullish when it got through this zone and consolidated. And it's just continuing to go from strength to strength to strength. And that's something that we've seen happen on this particular energy sector for quite some time. It's been pretty phenomenal. Are there any other things that we should be looking at? Look, we will bring everything back on the weekend. We'll discuss it. We'll do crypto in just a second. But I just wanted to quickly talk about Apple. Just be warned, we have earnings, obviously, Thursday after the close. And whenever you're looking at Apple, this is probably one of the scariest earnings announcements. We've got supply chain problems and a very high valuation. Apple needs to bring the goods just like Microsoft did, and then they need to bring the guidance. If they have bad guidance, that's the problem with these stocks right now. So just remember, Apple is sitting, it's not really sitting in a land of great valuation or anything like that. If you've got it, and you're confident in it long term, of course, it's an investment. Don't worry about it. But if you're thinking of trading it, it can be quite risky into earnings, just like anything. So remember, practice correct risk management. That's going to be one of the keys. ARK-K continues to slide here. There's no base set for this stock yet. There's a base in some ways for stocks that have already had earnings and they're already showing that they've got good guidance. But these stocks that haven't had it yet, it's going to be up, down, all around. We're going to see a lot of misses, a lot of bad guidance. That's probably going to be the story. Let's move over to Bitcoin. It's holding pretty well. It did rally like the rest of the market, then came straight back down with Nasdaq. We hit 39. Now, I would have expected we got to 40, but Papa Powell stopped that one. We're back down at support here. This is where we need crypto to bounce. So we're looking for crypto to come through 36,000, really bounce off this zone, and then move back up. It's a little bit of a different video today. Obviously, I'm coming to you on a laptop, so it's a little bit harder. If you do enjoy the videos, though, remember, we'll return to our normal schedule on the weekend. Please remember, subscribe, smash that like button, guys, and be careful out there. High volatility, still a scalping and day trading market. If you want to sit on the sidelines, there's nothing wrong with that during some points in time until you get clarity. And we didn't get the clarity we wanted from the Fed. If anything, we just got Jerome coming back in and scaring everybody. So we will hopefully get some clarity very soon. And when we have that weekly close, monthly close, maybe we'll have a long leg doji or something so we can say at least we've got a decision made, whether it goes bullish or bearish, and we hit that criteria. Until we see these yields dropping, it's going to be hard to call a base. That's going to be one of the key points that you need to be looking at in the markets. Thanks so much for viewing, and we'll see you very soon. Bye for now.